The performance of DMart definitely has been below par. If you look at the headline numbers, revenue came in at 5,218 crores, which is a tad below our estimates as well, because the ET Now poll was indicating to a figure of close to 5,500 crores. So it's a smidge below, not a very significant disappointment on that front. But what really has surprised us on the downside is the bottom line performance as well as the margins performance. Let me quickly highlight how the performance did transpire. Profits came in at 210 crore rupees versus almost 331 crores on a YOY basis, which is a decline of a little over 36% YOY. EBITDA came in lower by a little over 58% YOY at 324.9 crores. Margins, a massive disappointment, I'd say, 6.2% versus 8.7%. We were penciling in a contraction on the margins front of about 160, 170 odd basis points, but what they've actually delivered is quite dismal, and clearly it shows how massive a toll the entire pandemic has taken on the retail sector. While yes, revenues have been aided by FMCG and essential items purchases, but it's the lack of a growth or a substantial recovery in demand for the discretionary items, which is clearly visible in the way how the margins performance has turned out. Very, very disappointing, I would say. So the verdict here is that margins and PAT have been below expectations. Revenue, I would say, slightly subpar. Management has said that 6 stores were added during the Q2 of FY21. 2 stores were closed. So just about last week we had flagged off that recently the company has seen a store closure, their first ever since starting their operations all the way back in 2002, and this was a mature store, a premium location store which was located in Mira Road in Mumbai. It was already up and running for many years now. That has been shut, but additionally along with that, even the branch in Kalyan has been shut, and it has been converted into fulfillment center for e-commerce business in Q2. So this was a key development which the management has talked about in their press release. They've expanded e-commerce operations in select areas and pin codes in Pune as well. Business, well, they've seen significant improvement. It does gradually progress towards pre-pandemic level, but what exactly is the update in terms of quantum? They haven't been able to quantify that for us. Footfalls are significantly still very low, the management has said in the press release. Basket values, well, are significantly high. So, well, that does provide some amount of comfort or relief for the company, given that the basket size has been growing, but footfall being still very low is a bit of a concern really. FMCG and staples demand remains robust. They've said discretionary consumption has seen some improvement QOQ. If you look at how weak it was, how weak the demand was for non-essentials back in Q1, definitely there has been a good improvement in Q2, the management has reiterated. Supply chains and manufacturing in non-FMCG sector will take some more time to come back to pre-COVID levels. So they've not, once again, not given any visibility or any quantifiable outlook or any timelines to work with, but they're saying it will take some time to sort of restore the supply chain and the manufacturing-led disruption. Edelweiss has given us their first cut reaction. They still see good opportunity from longer term perspective as far as the e-commerce vertical is concerned, and how DMart clearly now is going to be pushing for that particular business. But JioMart, Reliance Retail, and how sort of DMart plays itself out in the e-commerce business, given the intense competition, will be a key monitorable according to analysts at Edelweiss. Key questions which have still remained unanswered. First up, when do we see the share of general merchandise and apparel normalize? Like I said, for discretionary purchases, what is the outlook? When will things start improving meaningfully is still unanswered. And another big question which we had also flagged off last week, and which was also a big concern for many people on the street, is why did we look at closing stores and not opening new fulfillment centers for driving the e-commerce business? Like I said last week as well, why have they decided to convert a mature store with a good footfall, with local customers walking in day and day out? Why have they decided to convert those into fulfillment centers instead of, typically how it plays out, how the fulfillment centers are usually located in outskirts or in less populated or less profitable areas. So that still continues to be a big question. So lack of any clarity or guidance on improvement in demand, especially for discretionary items, that also is something that could weigh in on the market sentiment on Monday.